Hello traders, welcome to this series of educational videos that FXCM has for you. My name is David Londoño. I'm a trader and market analyst, and on today's videos I would like to talk to you about trading across multiple timeframes or combining analysis from different timeframes. This is a great opportunity for me because I would like to share with you, I will say, a fragment of my personal strategies. This is called the triple screen, comes from the book Trading for a Living, and it was developed for my mentor. It's very simple. Once we get into there, I will start telling you about this triple screen scenario. We will have three different time frames. A higher one, which is our framework or our workspace. In the medium time frame, we have the trade management. Now, over there, we will check about the structures, liquidity was taken or something like that. And on the third time frame, the lower one, we have the time and our entry points. Before I show you an example of this strategy, I want to tell you that this triple screen can be worked on any type trader you are. For example, if you are a position trader, your three screens or your three time frames, the higher one would be monthly, the middle one will be the weekly, and the lower time frame will be the daily chart. For example, if you are a short-term trader, the higher time frame will be 4 hour, medium time frame 1 hour, and lower time frame 15 minutes. So let's go into example. Let's go to the charts, the good stuff, the things we liked. Just remember this: framework, trade management, and time to entry point. So I have the time frames I enjoy the most. I'm a scalper. Over here I have an example. This happened a few days ago on the Euro USD. As I was telling you, on the higher time frame, we have 1 hour, medium time frame 15 minutes, and lower time frame 5 minutes. Right here, 1 hour, 15, 5. Higher time frame, we have the framework. This is the lower low from the previous day. We see that the daily sell side was taken, and after this sell side taken, we have the change on the structure, and then the daily buy side liquidity was set just right there. So after that, what can we also see on this time frame? We have fair value gap that was originating this change on the structure. So this is where we want to work. Trade management, the structures, that's where we want to work. Where? On the medium time frame. So right here, we want to see development that the charts have here, the delivery price over here. We see how it beautiful trades within this fair value gap. We have again a sell side taken. Which sell side? The London launch. It was at 6:20 a.m. in the morning, New York local time. So we have the London launch liquidity, sell side liquidity that was set to be taken during the New York session at 8:45 a.m. So we have with fair value gap or within the framework, the workspace, sell side taken again. And once again, because work with the triple screen, we have to keep in mind that market is fractal. As we had the sell side taken on 1 hour and then a change on the structure, we have sell side taken again and a change on the structure. What else do we have in common on these two time frames? The fair value gap that was originating the change in the structure. We also have it right here. So we had a 1 hour fair value gap here, and then on the 15 minutes time frame, we have a 15 minutes fair value gap. That's where we have what? Our time and entry point. So once we have right here again, the change on the structure, we have this lower low, that's the one that had the sell side liquidity. And then we have this higher high, which is the buy side liquidity that is now put in place. We can use our Fibonacci from this lower low. Again, why this lower low? That managing as a fractal market, capture sell side liquidity within the 1 hour fair value gap. This is the important point we have to work with. And then we have the higher high. I personally prefer to work with between 0.705 and 0.79. I meant to call this OTE, the optimal trade entry. But we also know the golden rate, which is the golden gem of the Fibonacci, which is 0.618. And we can see how it beautiful synchronized with higher point of the 1 hour fair value gap. It is when the 15 minutes was originated. So that will be our entry point. And now, which one will be your exit point? We can have first take profit, the extension. So if we have the 0.618, the extension will be minus 0.414. I want you to see how it beautiful delivers over there. Over here, you can see the open, the high, the low, and the close of each candle. So I want you to see the extension 1.05724. I want you to see the high of this candle right here. It is 1.05724. Exactly the extension. That will be our first take profit. But since we're working on the triple screen, the higher time frame is our workspace. So we are attacking the daily buy side liquidity since we already took the daily sell side liquidity. So this will be our final take profit point. I want you to see this 1.06, this higher, it's over here. It's 0.06113. Well, that's just 8 micropips away from our exit. So this is how you can use the triple screen. This was an example on the scalping area. Remember, please, these are not training ideas. They are just insights that will help you through your trading path. You can also try to fix personal strategy with triple screen information or this triple screen scenario. It will give you different information from different time frames, so you will have higher perspective of what's going on in the market. For example, you are a swing trader, I will recommend you to do a back testing of this strategy using daily as the higher, 4 hours as the medium time frame, and 1 hour where you will find your entry point. I hope you like this strategy. For now, I have to say goodbye, so just don't forget to subscribe and share this with your fellow traders.